All right, ladies and gentlemen, got your watch list coming into November 4th, 2019, the first official trading day of the Colt New Year, well, day after, but we hit all-time highs in a huge, crazy pump into the highs at close on Friday. That was exciting. It's setting us up for a unique opportunity. I want to talk a little bit about what this means here, what we could expect, and then 3 stocks that I think are going to go crazy this week. One of them I already made a play on, and we're going to go over that play. I think I've already put about $2,000 on it for earnings in terms of highly levered options, so it's going to be pretty crazy there. So don't forget, option traders extremely risky. You can't lose all time. Most your financial investment. Please consult with a financial advisor. This is educational purposes only. But you've seen we've been coming out last 3 weeks. We've had a lot of gains, and I've been parlaying them into bigger plays. So understand the risk with that. At least you guys get to follow along and see. But then there's still going to be some other moves that could happen here with earnings, because and surprisingly, we are going to still have over 500-600 companies reporting this week. So if you didn't watch the strategy that we did with ANET, I made a video on the weekend talking about it. The Colt, we all cashed out around 350 grand collectively. I'm hyped on that. We had a great time on Friday. I appreciate all of you guys. Again, everybody watching, if you are liking the video, subscribe, showing love, and on the stream, because we're live Monday through Friday, 30 minutes before open. First link in the description, and it's pinned in the comments. I love you guys. That was a lot of fun, so let's keep this energy coming in here. We got November. Time to be thankful, be blessed, and see these opportunities. But from that play, I'm going to show you what I did with the Qualcomm here in this video, and then these other 2 stocks. The other 2 stocks are going to be McDonald's and Uber, and then an honorary mention to Roku, but Roku's too expensive, but it gives us a good distinction to see the differences. So the keys for tomorrow are very, very simple. Watch how the market moves here towards highs. Watch the push and pull factors. We're still watching that TLT play in the post-Fed response. That is very important. And the second one is finding these obscure companies for earnings. If all of you guys get your head in the game here, and what I mean, it doesn't mean you have to do anything crazy, but use this information I'm giving you guys and let's see what other companies are. I think there's going to be a lot of random movers that could occur on bigger scales like we've seen this earnings, and and using some of this stuff we've seen from these last earnings, we could use it to take advantage of it. So let's get into it. Drop your thumbs up on the video. You know what to do. But the first thing I want to discuss here is how we are at highs. You'll notice every time we kind of break out to high points, I think this was probably the best one when we hit 298, 300. We were coming off some volatility. It came up, and then here's another high. It shot up and then drops, and then it came up and then dropped. So watch for how tomorrow plays out. You want to see where does this high set us up at, and it kind of came out of nowhere, especially as we were starting to get a little bit red there. But there is some global stuff that needs to happen, or some negative global stuff going on, and we even heard from Trump today that they're going to sign the deal somewhere in the U.S., but we still don't know anything about the deal itself. That will be important to watch, so watch how you position yourself here, and honestly, this could be a good time to set up some iron condors as well too. And hopefully you guys are seeing the distinction. There's 2 opportunities to take advantage of right now. We're playing a lot of earnings, and those are the more higher risk, high reward plays that you could be making right now. Or at the same time, you're seeing how the indexes have been moving slow and then breaking out, setting a range and moving slow. This is perfect for spreads and iron condors, so keep that in mind as well too. What's going to give you that answer of which one you should do is what do you want? What is the result? You guys have seen me go for bigger gains here. That's what I'm kind of trying to take advantage of after seeing some of these earnings, and think about what happened. I did the first iron condors on Netflix, and I played some of these earnings plays, and I started to see what was going on. So I was like, okay, I'm going to try to take higher risk here. So keep that in mind there, but just watch how the market moves here. Watch the push and pull, and this is going to be interesting. But if anything, I'm going to expect some sort of stalling out or topping out before hitting the next leg up. Or if we do get another big leg up, it is going to be massive, because then that will be the next higher point up, the higher move up, before we kind of get some pullback here towards the bottoms there, or pullbacks just from hitting these all-time highs. But anytime we hit all-time highs, it gets pretty interesting. And then on top of that, November, December are some of the best months in the stock market. So December, out of like 50 years, 38 years ended up higher. And I think for November, it's about more than half of the time, over 60% or 50%. November closes up with the average gain of about 1/8%. So coming into the Christmas holiday, Q4, very, very interesting. So keep your eyes out for that. Oh, I forgot the most important thing you need to do. Poster plays. Let us know what you're looking at, and let us know what you're watching. The Colt loves you, baby. But as far as the first play, McDonald's, this is one of the stocks I think is going to go crazy. This is going to be a setup. And again, not only could it go crazy in the sense of it going down, given the news that came out, but it could also go up. And why is that? Well, because the CEO left. The CEO was fired. I don't know if you say fired or the company removed him. It's an interesting way to look at it, for having a consensual relationship with an employee. So the CEO, who's been in charge since 2015, he is now gone. So watch how the stock responds to that. And I guess insert Big Mac Happy Meal joke here. but it's going to go both ways in the sense that you might be surprised. Investors might actually like it if the CEO leaves, so watch for the upside. But if not, and if it's taken as negative, Starbucks could see a big drop. And considering how far we've already seen it go, this is what, remember, if you guys remember Friday, we put that out on the watch list for it to come up and come down there. So see how this plays out. This is going to be interesting. Then the next play to watch is going to be Qualcomm. So we got this play, and I will show you guys what we did on that one. And again, as it comes into earnings, the play is going to change, but I bought 100 of these at 19, the 92.50s, and then I got November 8th puts. And somebody brought up a good point on the video. They're like, why not go? Wow, we got the 72.5s. So these are now 3 standard deviations outside, but I think I got those at 19 cents as well too. So watch those. But somebody brought up the point. They said, well, if we're going for a big move, why wouldn't we get the weeklies here instead of the next week's? It could be a little bit better because Qualcomm is going to be reporting on Tuesday, and so you'll have time, but the key is finding the balance between the time, get any sort of post-earnings continuation, and then where the pricing is at right now. That's why I got time on the calls and then puts on the downside, because you saw what happened with ANET. It just dropped super far and then came back up in that same day. So if you had longer term calls, that could be a little bit better, or at least getting some time. So that's the play we made. I might be picking up more puts, or the day before earnings, Tuesday, I might add to this position. I just want to see where the stock's at. I want to see how the volatility is, because on Friday, it did move up a lot. Even after we made the purchase, it was crazy how much the premiums actually went up. So watch out for that. And I like it. And this was the strategy that we were saying. Here you can see on the curve, part of the strategy is that it was finding these companies where the market maker is pricing in a big move, and that the expected move, and the expected move is literally if you shorted both at the money, or one in, like if you shorted both at the money contracts right here, what would that price be? That is what's giving you this expected move based on the premiums. So if the expected move is about 75% of one standard deviation on both sides, that means the market is expecting a big move. But the next part is getting a cheap contract, or a contract that falls within 2 standard deviations, or right next to 1 standard deviation right outside, for a cheap price. That's why this falls into place. So that's what we did. And now why I'm bringing that up is so you could see the other plays I want to watch. I want to watch Uber. So here's Uber. You could see kind of the same exact thing here. It's just under 75% there, but the market makers are pricing in a big move. They're going to have their earnings, and you can kind of see where the stock is. And you also got to see how Lyft reported. They're an IPO. They're hanging at the bottom. This is probably, just from a price and value perspective, especially with some of these IPOs, this is probably going to move. And you could look at how Beyond reacted as well, because Beyond had their lockup, and that's the same situation with Uber. But the difference is Uber's probably not going to report any sort of positive growth like Beyond did. But that being said, take a look. Here it is. It's pricing in 1 standard deviation. Let's go to the prices now. You could get within 2 standard deviations on the calls for $40 or $25. And then same thing with the puts. That is a good opportunity, or that at least fits within the strategy. So I don't know if I'm going to play it, but I'm pointing this out for you guys so you could kind of see, take notes, and we could study this and look it over. But now let's go to the honorary mention of Roku. So here it is with Roku. Same thing. It's a big expected move for earnings, but now when we go to the pricing, what do you notice? 2 standard deviations is $110. 3 standard deviations is $30, and this is where it gets a little bit better, but you might end up spending more money. And then when you even go to the puts, it starts to get real crazy. You have to go up pretty far just to get a play out there on the put side. So that does fall within there for 60 cents, but it's a little bit more expensive. So we'll have to see how the prices work and go from there. And now, as another distinction to understand this a little bit better, here's Allergen. They have earnings, I believe, Tuesday morning, and you could see here, that's the expected move. It's not big. So not every company prices in their expected moves for earnings. It's not going about 75% of that standard deviation, so you guys could see that. And even with that being said too, watch out for all of the healthcare companies. There's healthcare, biotechs. Those are going to be popping this week. I wrote some of the biggest earnings I want to watch. Watch Uber, watch just Beyond in general too, just because of how it's playing with everything. That's not an earnings play. But then Shake Shack, they could be decent. And again, if we wanted to run through on all of these, you could see Shake Shack. This one's pricing in a big move as well too. So this is where we have to ask the question, is it the market or is it these individual companies? But hopefully you guys are seeing it's not only the expected move, but then it's also coming into the prices. So now Shake Shack, you're getting almost 2-3 standard deviations to get anything of a good price. So just be careful with that. but watch them for earnings. Then MyGen, I really like MyGen. I don't know if I'm going to play for it. It's crazy kind of how it's moved so far. Again, you can take a look at them. Where are they at? Oh, I don't know what's going on here with this, so it's not looking up, but it looks like it's pricing at a pretty big move. But keep an eye out for them. They're a biotech company, and again, the key range. Remember, that was another one of those crazy plays. That was like $30 to $2,000 or something we hit on there. So watch out for them. Watch the Real, their IPO. The guys are holding that in the long-term portfolio for the real estate one. If you guys remember that, they still got those shares, but keep an eye out for that. That could be decent, especially the run-up. And then Allergen, like I said, again, they're even a dividend stock, and even with that, watch Abivai. We added that to the long-term portfolio. They're killing. I only got one share, but we'll see. And if you guys haven't seen the long-term portfolio, we've now reached November 4th, so we could deposit more money. But remember, I did that with Fitbit. Fitbit got bought out. I sold out those shares. It really wasn't worth it to hold it for an extra $5 considering it. I think maybe shareholders could ask for more, but they still have earnings, so just see how it plays out. But at the end of the day, after 1 month of performance, we started out with $500. We added another $300. I added the $100 I would have put into Robinhood into the long-term portfolio, but considering the fate of the Robinhood, we might need to add that back again, but we'll see. Rest in peace, Robinhood. I'm just kidding. We're going to bring it back to life, baby. Just watch, baby. But in general, though, we deposited $800. We're sitting at $109.27, and I'm holding about $275 cash. So if you guys even see what happened there, I deposited $300. We did the Fitbit. We sold out of that. So what really happened here, I'm $25 shy of my $300 I deposited. The account's up, but I got to walk away with a share of Abivai. We added to the portfolio. We got another company, and we still have the money we left. And probably this month, I'm not going to buy anything on this account. And why do I say that? Simply because we are up on everything. You know, think about this. In the last month, every single long-term stock we are holding, we're up minimum 3% on everything. And some of them, Spotify has killed it. I'm excited for this one. I think this might even start to become my favorite next to Snapchat. I might start pumping Spotify as my number one pick now, just because long-term prospects of it. We got it literally 114. We were able to buy that at the bottom. If you guys got to see, you know, we got that literally at probably one of the best prices. So I'm really down with that one. It's good to see it come up, and if it does go there, the growth opportunity will be great. But you guys even get to see, there's no coincidence. The safe stocks, all of these are dividend stocks. We're up 3% on a minimum, but then the growth ones are making us 10 to 27%. But in general now, since I'm up on all these, there's no point to deploy more stuff because anything similar to these are probably going to be up. So I'm going to hold the cash because think about it. If the stock market keeps going up and assets go up, our cash is losing value because we would spend more money to get another Spotify, to get the same Snapchat. We would spend more to get less shares. So the whole idea is I'm going to hold this here, and then if it comes down, the idea is to get more with their cash. So now this is how we're trying to keep it balanced here by having $633 in equities, $300 in cash. We are balanced to about a 60-30 ratio or 66-33. You could get the idea there, but we'll see what happens there. Let me know what you guys think. Should we sell super far out of the money premium? So if stocks are down and we're not able to find something, should we get a little tricky with the long-term account and sell crazy far out the money premium if we know we're not going to buy anything? Let me see. I might have to take this to the Colt long-term shareholder meeting to see what we should do with this. And then I'll have to explain to shareholders what happened to the Robinhood account. I know it's a long story. Material impacted. There was unforeseen circumstances, and you know the impact of foreign currency as well as the geopolitics and the trade. It had an impact on our account. So we're guiding up still. We're working with negative revenue there. But I think we could still guide up for the next quarter or by the end of the year. Q4 looks nice. But we'll give a update at our next meeting. We're still fully confident in Chad and Josh and their abilities to lead and go forward from here. And thankfully our segments in the long term have been able to be profitable and supplement some of the losses that we've taken. But there's an update on that. As far as final plays though, watch Apple. They had a monster move. It was crazy. So again, watch how they are. And again with Qualcomm too, that's going to be important to see how it plays with Qualcomm because them and Qualcomm together are going to be very important. And they might have a back and forth there. I'm going to be watching Roku as well, Qualcomm, and then watch Facebook too, and even Apple as well. But watch out for the earnings continuation. Remember how Netflix moved? They're all looking like that. And that even reminds me, watch Google as well too. It's starting to look like Netflix. I might even want to pick up some calls there. Remember, I wanted them the day after. So I'm going to keep my eyes out for that in the morning. And then Boeing, same thing. It's still at this spot. I love it when Boeing does this. A big move is getting ready. It could look something like this, or it could look something like this. The question is going to be timing and pricing. So watch out for that. Then lastly, on to these companies, watch Bank of America and XLF. I like to straddle around these points. It's looking like the earnings plays, but the volatility is changing and gotten cheaper on both sides. I'm pretty sure of it. So watch how that comes in tomorrow. Watch TLT as well. We're still in that big play, and see what happens there too, because it did something very, very unique at close. The SPY was ripping up and had that monster mash up, but TLT started going up. So again, watch financials, and that post-Fed is not over yet. We still have a lot of earnings, but there's a lot more. And then Abivi, I wanted to grab another share of it since we only got one, but we might have to keep it there since we're already up 3%. But that is your watch list, ladies and gentlemen. Make sure you guys are subscribed. Make sure you post your watch list. Make sure you're hydrated, healthy, ready to go. I'm going to see you in the morning. Stay positive. Stay blessed. Again, I love all of you, man. I appreciate every single one of you. Let's close out this year. Let's be smart. Let's learn from the mistakes. Let's take the pressure off. Don't take it so serious. Have fun with what you're doing, and you will watch the doors open, my friend. So I love you all. I'll see you tomorrow. Let's